So, what is technical analysis? Uh, Technical analysis is an art. It's an art about studying the data and then inferring how that data convert into charts, patterns. All right. So this is the information which is available to each and everybody. So when you go into a technical chart, you exactly know in the past 1 week, maybe 1 month, 1 day, what had happened to the stock. That is represented through candles. And candle represents a price action, that from where the buyers came to the point the seller came, where the price opened, where the price closed, what was the day high, what was the day low. Everything is available to you. But as a technical analyst, it's your responsibility to understand what that data means and how it is coming together along with all the candles and forming a pattern. All right, let me give you an example. So I am using US market tools. This is called Think or Swim. Similar to this, you can use any tool which is available at your disposal, and then you can like go through that and see how the candle works. So right now, I believe everybody know Amazon. Okay, so in Amazon, this is a candle. I'm just taking a very simple example, candle. So this candle tells me that there are four parameters to it. First one, what is the open price? It opened here at 3627. What is the high it made? It made 3637 high. You can see all those numbers higher, open, high, low, and close. I'm just talking about the candles. Okay. It closed at 3580, 3599, and it made a low of 3580. So these are the four parameters which candle tells you. Now you have to understand the candle from a perspective of a price action, meaning that if a candle opens at a price and then goes up, it means buyers are coming for that candle, meaning buyers are interested in buying that stock and they're trying to buy at any available price, and that is pushing the price higher. Similar to that, if the price of a candle or the open of a candle is higher than the close, it means the seller came uh, at the start of the stock market day and then they tried to sell and they took it to the close at the lowest price. So this is what a candle trading or a candle basically means. We'll deep dive into that in the later slides, but just wanted to give you a glimpse of what candle is. All right. So, as I've mentioned here, it is a study of the market action, that how a stock has behaved in the past, and that past could be half an hour, 15 minutes, 1 minute, 1 day, 1 week, 1 month, 1 year, 10 years. That is totally like depending on your horizon, whether you are trying to make inference for a short term, for a long term, for like medium to long term. That depends on that. And technical analysis is the study of prices, the thing which I just showed you. You can do it through candle, and there are multiple ways. You can, some people use Heiken chai, some people use bar charts, some people use, there are different mechanisms to represent the price action. The most easiest one to understand is candles, and I use that. Then you try to make the candles, frame the charts. In the charts you come out with the patterns and then deduce information that yes, for last 5 weeks, for example, Amazon is going up, up, up. Now my candles pattern is suggesting that yes, now it has reached in a territory where it has got into an overbought range. So at that time, if I went like long, meaning I was bullish on Amazon, at that time I would come and would try to take my profit. Okay, so this is where it is totally different than the fundamental. In fundamental analysis, you are most invested into how the company will proceed, what will be the EPS for that company, earning per share, what is the profit by earning ratio, what is the growth prospect of that company, how the margins are going to behave, what is the impact of current market circumstances on the growth of that company, if there are any possible sanctions or any liability is coming towards that company, or if they are doing any kind of acquisition, all those things are like uh, evaluated in defining the price for the fundamental analysis. So that's why that is something you have to do a deep research. But here you are working out an existing piece of data. All right, that's the very basic difference between how the technical analysis is totally different from the fundamental analysis. All right, then the next things are, everybody knows how the information has been priced into the candles, which I just showed. Price moves up, down, sideways, and that action represent the market direction. Then for each stock, there's a price action. Price action leads to some level of support, meanings buyer are coming to buy at that range. Resistance, sellers are trying to sell at that particular price. Okay, we will again, as I said, we will go deep down into these things one by one. Then, technical analysis can be applied to any of the market instruments. You can apply this to Forex, you can apply this to bonds, yields, commodities, stocks, futures, options, anything you know about any instrument, even crypto, you can come and you can try the technical analysis. It works. The only thing is you need to practice, practice, and practice, and refine your trading strategies, your charts, so that you can reach ideal state where you can define that yes, these are the clean support levels and these are the perfect resistance levels, and then you can trade in between. So, in order to do a technical analysis, you have some considerations. First, the candle prices, which I just showed you, open, high, close. Then there is a average trading price. There's one more ATR, which is average trading range, which means how much a stock moves, particularly in a span of one day or in a span of 1 week. That gives you a clear idea that yes, if for example Amazon has a trading range of $80 in a week, okay, so at most you will have in your mind while you're doing a trade that yes, I should be trading about $80 in consideration for Amazon. Then we have volume. These are the number of, like in case of stock, the number of transactions, buy, sell, both included. And then the last one is open interest. Open interest is specific to the derivatives, meaning futures and option market. It tells you the open position for a contract at that particular time. This helps traders to identify that what will be the possible support or what will be the possible resistance level for an option contract. Then we have trend lines. These define how the candles are moving. It's like we use this in conjunction with candles. So when we define a candle, we can also use the trend lines, which tells you or tells us in general that yes, how the candles are behaving during that trend line channel or individual trend line as a resistance or a support. Then we have multiple chart patterns and formations. You have to like understand these chart patterns a little bit in depth so that you can identify, you can scan before the market starts, and you are well prepared for your trading for the next day. Then we have indicators. There are multiple indicators in the market depending on how you want to use it. But people prefer to use limited indicators, but they want to have more clean price action using candle patterns. Okay, so I will just explain you a little bit about trend lines and candle patterns. Then we'll go in detail on how they work using the Think or Swim tool. So a trend line is simply a line that connects the prices for a stock. So if I take an example here, if you go here, uh, I have a trend line. This is a trend line which I have created. This trend line I've started from here, which is the December of 2020, and I've taken this trend line all the way up till today. So this is a trend line which tells me that my current uh, market trend for Amazon, how it is. So anytime my stock goes up above this dark black line, which is the trend line, I would consider that as a positive trend. Anytime it tries to come down or act below the trend line, I would consider that as a negative trend or a bearish trend. So it gives me an idea that yes, at this time of the year or today, Amazon is not behaving as bullish, but in fact, it is trading in the bearish territory. So I will take some steps back if I want to go long. Long meaning I want to be a buyer in Amazon. All right. Similar to that, if anything was up, and like in this case here, it was showing me that yes, Amazon was in a bullish trend, and I should uh, be a buyer on Amazon, and it will benefit me. And I will be a buyer around this range above the trend line, and will be looking forward to book some profit at the second trend line and then the third. So in technical analysis, it is recommended that you enter into a stock. Let's say you enter 100 stock into any equity. You need to understand to book the profit. Booking profit is really, really important in technical analysis. It gives you like small consistent profit of 20%, 10% in derivative market, or about 5 to 10% in equity market is significant returns. So do not trade on the idea that yes, I have bought a stock, tomorrow or maybe in a month it will get double, triple, or four times or five times. That may happen, but 99% of the times it will not happen. And you will end up losing your hard earned money in that stock. So anytime you see some level of profit, like I usually, if I see in option contract 25% of the profit, I definitely book 25% of my uh, option quantity, option launch. Then it goes to 50% of the gains. I try to cut down on the 50%. Similarly, when it went to 75%, I cut down 75%, and then I leave the runners so that in case it moves further, my my trade still remains open, and I don't feel that yes, I have lost the opportunity to make more money. In case it goes down, you still have 75% profit plus 75% of your initial invested capital is out of the market. Okay, so profit booking is important, and trend lines give you that direction that you enter on the break of the trend line on the upside, wait for the resistance line, and in between you can buy and then sell. Similarly, you can sell here on the top of the trend line and then wait for it to go to the bottom and then book it. Okay, then as I said, trend line could be uptrend, downtrend, both, and it gives you a directional view. It's a long-term horizon view through the trend lines. Then we have patterns. Patterns are really, really important, and I have actually got some set of pattern information. So let me give you the idea. The candle patterns are multiple patterns, which can be based on a single candlestick, can be based on two candles, can be based on three candles. And these candle patterns usually are really, really helpful when you are estimating a price or estimating the direction for a particular stock. I prefer to be using three candle pattern because they are really, really good and they have confirmations. So in three candle patterns, there is very important one, which is the morning star. This pattern occurs during the downtrend. Suppose a stock, I just traded a stock called Wayfair based on this. So you look here, let me just expand it. Look here, it is one, two, and three. This is a three candle pattern. Okay, and it is coming from a top end to the bottom, so it's actually in a downtrend. So in the downtrend it made that pattern. Okay, so if you look at this pattern, it is a bullish candlestick pattern, so it is suggesting that yes, now it should move up. Look at the price section of Wayfair after that. Once this three candle confirmation is completed, the price started from 243, went on to make 283. So this identified this pattern on 4th of August. I entered into some positions, and then my first uh, target was these EMAs. I will come to exponential moving averages and moving averages in just a minute, but my target was these lines. So once I crossed this line, I booked some profit. Then I waited for my uh, second exponential moving average, which is 34, and the green one is 12. So let me give you an overview of the moving averages as well. So moving averages is actually a basic average of the last candles. So if you're using a moving average for 12, it means it takes into consideration the price of the last 12 candles and then average it out using an exponential formula. A 34 EMA is the moving average for the last 34 candles. The lowest moving average will be the quickest because it has only seen last 12 candles, and people use 20-day moving average, 50-day moving average, 100-day moving average, 200-day moving average. But again, it entirely depends on how you want to use it. For me, I try to use 12-day EMA, exponential moving average, and a 34-day exponential moving average. Plus, when I use them, I try to identify them with different colors. So usually I represent the 12-day moving average with the green and a 34-day moving average with the red. So this gives me a clear-cut idea that yes, whenever there is a 12-day moving average, meaning the nearby average is keeping higher than the longer term average, it means the trend is bullish. If the near term average is lower than the long term moving average, it means the trend is bearish. So, this in conjunction with your price action, in conjunction with your trend lines, helps you to identify where the stock is heading. All right. And these trend lines, these moving averages allows you to give like help you in identifying the support and the resistance area as well. And there's a very basic principle in trading. Whenever a stock has hit the support and made a base, it will always go up to test the resistance. Similarly, if a stock has tested the resistance and could not break out from there, it will always come back to the support area. So in this case, this green line. All right. So there are multiple patterns which we have. So let's go back to them. So as I showed you, morning star is a three candle pattern. Similar to a morning star, there is an evening star. This happens when we are in the bull trend. So anytime you see the three candle patterns like this, where you're starting from the positive, at the top you become little negative and then heavy negative. It means now the trend will change and the next 1 to 2 candles will be big red. So if you are here and you want to make a position, if I were you, I would go short on an equity or short on a future so that I can benefit from that. So these are multiple candlestick patterns, and if you try to understand again, this is the definition of a candle. This is what I explained you earlier and showed you in the uh, charting tool as well. That candle, this is the open price, this is the close price. On the top is the high, bottom is the low. Usually the rectangular box you see is called as the body of the candle, and the up and the bottom are called the wicks. So you need to understand that this is the price action. So anytime you open lower, close higher, you are a positive candle. Anytime you open higher and close lower, it's a negative candle, a red candle or a green candle. All right. So one more important pattern which I usually try to use is inside day pattern. So I have an inside day on a stock called DraftKings. So, what is an inside day candle? Inside day candle is a candle which actually comes in between, or the entire body, the entire candle is within the length of the previous candle. This is a really important candle pattern. It usually signifies a breakout or a breakdown in a candle or in a stock. So anytime uh, the next candle goes above the high of the previous candle, it will be a breakout, and that pattern continuation can run for maybe 1 to 2 candles. Or if there is a breakdown between the lower price of the candle, the same thing, the bearish continuation can happen for 1 to 2 candles. And you can draw candles, like in my tool, you can draw candle for a minute, 5 minute, 15 minute, 30 minute, 1 hour, whatever time configuration you need, you can draw a candle. Usually I used to use 30-minute candles for an intraday trading, or I use 1 day candle for my view, and I use a weekly candle for an overall trend in that equity. All right. So if anybody has any questions regarding this, let me know, and I will try to answer you uh, during that conversation of Q&A. All right. So moving on from candles, uh, we have patterns, which is called head and shoulder patterns. Head and shoulder patterns is a combination of multiple candles. Okay. Head and shoulder tells you that yes, and you must have heard about head and shoulder patterns in the news or in the market couple of times in the history, that yes, somebody is making a head and shoulders or inverted head and shoulders, and based on that the stock behaves. So usually head and shoulder leads to a downfall. So let me just scan for a head and shoulder pattern, and then I can tell you where it exists. So again, I have a head and shoulder scanner, and it's making in the Disney. So let me open and show you on the Disney chart. So this is a head and shoulder pattern. You may not be able to clearly identify it. So let me take a screenshot and show it to you on the paint. These are one of the most important candlestick patterns. So let me just take a brush. That. So in this, we have a shoulder, then we have a head, then we have a shoulder. This is called shoulder number one. This is called a head. This is the shoulder number two. This is called the baseline. And this is the height of the head and shoulder patterns. So now in this case, if Disney fails below this level, it can easily go at least the length of this. So Disney can at least go to 167.11. This is a bearish candle pattern. It is not a single pattern, but it is a combination of multiple patterns over a significant time frame. I'm using a daily chart, so this is over a month or so. Similar to this, we have inverted head and shoulders. So in inverted head and shoulders, it's the other way around. It usually is like this. This is called inverted head and shoulders. Let me find you an example, and then we can talk about that. So let's take an example of Netflix. You see here, Netflix is making inverted head and shoulder patterns. So let me again take a screenshot. It's here. So this is the baseline. This is the shoulder. This is the head. This is another shoulder in the making. So anytime it crosses this level or the baseline of 553, which is this, it can actually go at least this length. So here it was starting from, let's say, 500 to 550. So possibly like $60 move can come here in the inverted head and shoulder bundle. These two are really, really important, along with the morning stars and inside day. Inverted head and shoulders are really, really important technical chart patterns. So you need to, when you're using any of the tools, you need to be very clear on making these identifications, and they are really, really helpful. Okay. Then we have some more patterns like ascending triangle, descending triangle, symmetrical triangle. These are again a combination of multiple patterns or multiple candlesticks. So ascending triangle is, let me just take an example of caterpillar. Okay, this was an ascending triangle, meaning that yes, the bottoms are going up and the tops are not going up that much. So if I draw a trend line joining from bottom to bottom until here, right, and then join the top from here, you would see that the bottom line is kind of constant and the top line trend line is coming uh, and converging towards the bottom line. So it forms a triangle formation, which is called ascending triangle. In ascending triangle, you are going up, but the price action is not that significant. Meaning you're definitely going up, but your average trading range has reduced, and you're finding difficulty to cross that level, and then you fall. So similar to here, if you see Caterpillar has an ascending triangle, it failed to cross and uh, cross this line, and then it fell down. So again, from a technical trading perspective, you need to understand what all patterns are there, moving averages are there, and then use them for your own inference. Again, as I said previously, few minutes back, technical analysis is analysis of the data in front of you. You need to trade on what you see. You do not need to trade on what you feel. Okay, technical analysis is art. For that you have to spend time to observe the stocks, evaluate the patterns, make your trend lines, set your moving averages, and then take a calculated trade. Most of the people I know, they trade day trading as or swing trading as gambling. No, it is not. It is a science where you need to invest time figuring out what needs to be done. If A plus B makes something, you need to be ready to grab that opportunity by your hands and then use that opportunity to make money. Okay, so let's move forward. Then we have concept of intraday swings and like long-term trading. So what is intraday trading? So now we have a basic framework that yes, we know what is a candle, we know what are the possible candle patterns, the basic ones, not the complex ones, but at least the basic ones. We know what are the moving averages, we know what is the volume. Then we try to use this information and try to make a trade. A trade can be categorized into three different categories. First one is an intraday trade. An intraday trade is practically that you're looking to open a position and close the position during the daytime. You are not trying to carry forward that position to the next day or next week. So that is a intraday trading. Then we have a swing trading. Swing trading is you enter into a stock at the bottom, like I showed you in the trend lines. You enter at the bottom on the support, you enter there, and you're looking to carry a position till the resistance line is met. So you try to carry that position for 1 day, 2 day, maybe a week. That is called a swing trade position. Then you have a short term, like short to medium term position, where you buy a equity or buy a position and you try to hold that position for at least 3 to 6 months. And then you have a long term uh, investment where you buy and keep on buying a certain equity, because you know that yes, after 5 years or 10 years or into your retirement, that equity will be multifold and you will benefit from that multifold gains. Okay. And this is the basic. So, information about the technical charts and understanding. Now, in making a trade, you have to be pretty much vigilant on which all stocks you should trade. Some people try to trade stocks which have very high volatility, meaning that they can be 10, 20, 30% move in a single direction on any given day. Some people try to avoid those and then try to trade on a consistent large scale big caps. And all these patterns, like all these chart patterns or trend lines, whatever we have discussed, they are applicable to all these trades, even to penny stocks, which are high volatile, or to the large caps. Now, art is how you can identify that which stock should I pick to trade tomorrow. For that, you usually, or I specifically, create a trade plan in which I look at the my watch list. So I have a watch list here where I have included all the big patterns, all the big stock companies, and then I try to see what has happened to them during the day, and then try to evaluate those patterns or levels in my evening analysis, and then I'm ready for my trade for next day. Some people use scanners, like I have a scanner where I have very uh, simple scans where the inside bar. So we talked about the inside day candle. So it's a candle between three candles. So if you look here, we have a stock called Robinhood. It had made a double inside bar, meaning it has a candle within this candle and this candle within this candle. So this stock is actually grinding very tightly. Anytime it has an opportunity to break down below 50 level, it will go down. Anytime it has the opportunity to go above 66.50, it will break out. Right now it is towards 50 cent 56.80 towards the lower level. So I would wait and watch where it breaks out or break down. In case it breaks down, the first support which comes to it is the 12 EMA, the green line, which we have discussed. So if I have to be a buyer and it breaks down from here, I will not be buying it here. I'll be buying right at this point. And I will keep a very small stop loss in case my trade goes wrong. So this gives you an opportunity to make a calculated trade based on the candlestick patterns, based on the understanding of the EMA, and entering at a fair price. Like in stock market, entering at a good price is pretty important, because if you entered in equity or any instrument at a very good price, you'll be able to exit at a fair price in profit. If you try to chase, like in case you ignore this pattern and you try to chase and it doesn't go above this line and it fails. So let's say you entered at around 62, 63 area. thinking that it's blown out, it will break out and will go up. You entered 100 stocks here. You invested $6,600 or $6,200 in it. Now it could not break out and it failed. Now it will come down to 47 before it stabilizes. So you already lose about 25% of your capital because you just try to trade out of context and you did not let the patterns break out or break down. So it is really important when you're doing a trading that yes, you go through the patterns, you evaluate them where they're heading, and then make a calculated decision out of it. Okay. So one more thing which I wanted to cover is the let me just go into this pattern. Let me pick up a very simple stock called Apple. So these are the other indicators along with the candles. So candle is like one way of understanding where your chart, where your stock is heading, along with moving averages like 12 and 34, which we have added. Then you create the trend lines, which give you an idea of the directional bias for a stock. And then you have Fibonacci. I'm not going to cover Fibonacci as of now because Fibonacci extensions, Fibonacci retracements are little complex, and I don't think so we have that much time. But the two indicators which I have found really useful is RSI. It is a relative strength index. So this, in combination along with EMAs, the trend lines, gives you an idea that where the stock is moving. So RSI uh, value above 70 gives you an idea that yes, my stock is still in the bullish zone. Anytime the RSI is below 30, it means that it has reached the bottom of its down. So it may spend some more time, but it may not go down further lower than that. So depending on the candles, EMA, and the combination of RSI, you can evaluate where the stock is heading. There are many indicators which are available in the tools. There are indicators where you can actually go and write the scripts. So, for example, I have indicators here where you can go and set your own configuration. Then, yes, you want to have these values. So, it totally depends on which tool you are using. And then you can define based on your own understanding that yes, I want to play this trade and this is my code for that. So if I show you one code here, let me just, so here you have all the codes. You, if you are pretty good in scripting language and you know what you want to achieve, you can even define the candle patterns here, so which gives you an indication on your chart that yes, this is the entry or this is the exit or this is the profit booking, all of that. So it all depends on which trading tool you're using, how comfortable you are with your scripting language, and then you can try them out. There are like hundreds and thousands of scripts which are available in Google, which can help you to start with your technical analysis. Try that out. In case you're struggling, there are multiple forums on the internet. Just try and mention. Most of the people must have had the same issues which you have while starting, and you will find your answers pretty easily. All right. So these are practically your basic candlestick patterns with EMA. So right now I'm leaving to couple to open the Q&A session because we are already into last 40 minutes, last 20 minutes. So
Okay, Naval, there are three questions. One is how can we create an exponential moving average? If you can elaborate that. That
okay. So exponential moving averages is like depending on your tool. If you go and you search for a moving average or moving average. So here we have a moving average which is exponential. You just need to add this similar here, and then you need to configure it that I am looking for a moving average for the length of 34. Okay, and give it a color. I usually use red color for a moving average of 34. Try to use the price, closing price, because moving averages consider the prices, so they have options close, open, and multiple. So I'm using the close price to create my moving average, and this is an exponential, and this is available in default in all of the trading tools.
Okay, thank you. Next question is any recommended tool for Indian market?
Uh, Indian market, like you can use a tool. Let me just open this. Uh, there's a 1 second. I have one tool. I'm just opening my credentials on the phone. So give me one moment. That tool is available in India and free of cost, and you all can use that tool. That's pretty good. Where is that tool? Uh, I don't. It is starting from trend something. 1 second. I just forgot from it. It's usually like top of my head. I'll just try to recollect the name and share it with you. But that tool has almost everything you need for trading in Indian market.
Okay,
It has all the
so
tricks, and it
uh,
also has
as
all
you
the.
can recall, then we can post that in the portal as well. So the next question, which is if a small moving average goes upward to a longer moving average, then how to get the target or set the target?
See, if you are looking at a slower moving average, okay. Let me go back to the lower moving averages are always faster. So in case like this is the low moving average, if it is up, first mean there's a positive trend. Second, the candles and the moving averages they love each other. Every time a candle is near to the moving average 12, I try to go long, and then I try to wait till a resistance level using Fibonacci or trend line comes, and then I exit. And anytime it gets rejected from the trend line on the Fibonacci level, it will come back and test the EMAs. So that's how I trade. So if you see here, my green line overtook the red line, so the trend converted into positive. And if I entered here, like leaving these opportunities, I waited for my candle to come and test the 12 EMA. It came, I entered, and then I kept it till the moment it hit the Fibonacci level. So here it hit. So at this time, I would be a seller uh, of some quantity in my position, and then I would wait that yes, whether it will test the next Fibonacci level or the trend line level. If it does, then I'll be the seller of 75% quantity. And if it gets rejected, I will exit my position and will wait if it comes back to the 12 EMA. So you have to remember anytime a candle goes away towards the moving average, it will come back and test it no matter what. It may take 2 weeks, 3 weeks, but it will happen. Similar to that, if a candle breaks below the low moving average, it will go and test the 34-day moving average. So then it will become any support which was previous support, if breaks down, will act as a resistance. So it's like a dam. Till the dam is there, the water in the area is like well managed in the dam. Once the dam is broken, the water flow is significant and it blows out, right? Similar to that, there is a resistance and support on the same line. If the support acts and it holds, then the stock will jump. But if the support breaks, the stock will go down and then the support will act as a resistance. This is the fundamental in the technical analysis.
Okay. Well, it's wonderful to have a discussion with you, and by using different trends and charts, we can define the targets. Uh, if anyone has any question, then they can post.
So there's one more tool like which I was saying. It's called the Trading View, and you can use this Trading View in Indian market, and you can use it in like any market globally. So it has all these tools, all the candles and everything. So if you want to trade Indian index Nifty, all right, so you can go here and you can create these trend lines. You can add some of the RSIs. You have all these tools available to you to create trend lines. You need to create any uh, Fibonacci. Like Fibonacci is too complex at this time, so I'm not covering that. But these are all different tools available to you, which can help you to make a calculated decision on your trading.
Okay, really great. So, can we use this different chart in this tool to set up for particular stocks, and they would provide us signals
Yes.
automatically, or we have to look this chart on daily basis or hourly level to see his signals?
See, it entirely depends on how you set up those indicators. If you set up indicators to show you that yes, there is a buying opportunity, yes, they will show you. So let me show you an example here. So if I go back and show you this, and you see here, it's saying buy the dip. It's saying buy the dip. You see these arrows? It's telling me yes, I should buy. The arrow on the top telling me I should sell. So when you're setting up these indicators, depending on your tool, you need to add these signals that yes, if the situation or if the condition is this, let's say if the condition is that yes, back to back candles are going up and the moving average is going up, give me a arrow, up arrow. On the other side, if these conditions are failing, give me a down arrow. So that will happen, but you need to set those conditions according to your own need, like how you want to see what should be indicated to you in terms on charts. That's something like one has to figure out himself.
Okay, so hi everyone. So it's look like a very basic that we have started today, and Naval help us in great with great passion. I know that at his end the time is very odd, but he gets some time for us and share his knowledge with all of us, and that is what our OGuild platform is. If any one of you want to share anything, then we can schedule a session, and we would come back to Naval for more interesting session in future as well. Thanks, Naval. Thanks for your time. Thanks,
Yeah.
everyone, to
Thanks,
get
Kapil.
onto the
Like,
session.
but before you leave, I think Mr. Chiranjeevi is asking me a question. How do I find what stocks to trade? So, Chiranjeevi, I have some scanners which I make. Like I have scanners which I have made. So these scanners give me an idea that yes, there are patterns which are available in all these tickers, and I go and look at them, and if anything feels comfortable to me that yes, this ticker is good, it is confirming with me all the indicators and giving me a good indication, I would go. And depending on the type of pattern which I have, like inside day pattern usually runs for 2 to 3 candles on the daily basis. Morning star candle usually runs to uh, one candle at least. Engulfing patterns runs till 3 to 4 candles. So depending on that, I would try to trade. I would try to do an intraday or try to do a swing. Okay, so that's how I do my trades. And before I leave, I usually try to post my analysis for US market every day in the night for the next day, because uh, in the morning we all are occupied in the offices. So I set up my alerts in case I have to trade something. So I evaluate all those things in the evening and I post it on the YouTube channel. I think Kapil can give you that detail. And I also post that information on Twitter. So if you are interested to understand and to learn, you can also follow me on Twitter at Naval for you. And it's right there. I'll show you. And if we are doing a session next time, I will show you much more into technical analysis, including Fibonacci, uh, trading on open interest volume. So this is my handle, Naval for you. You can come and follow me here. I try to share all my analysis for tomorrow in a YouTube channel. I post a video and then I leave it to the people so that they can give me any kind of feedback or any questions they have, and then I take it from there. All right. So I would like to thanks Kapil to giving me an opportunity to share what I know. So Kapil, I'm handing over to you now. Thank you very much.
Thank you, Naval. Thank you for this knowledgeable session. And we would get you back on this platform. With this promise, I am closing this session. Thank you. Thank you very much for your time. Thank you.
Thank you very much. Bye bye.